How much does a mobile home park cost? Mobile home parks have been known to be the most profitable asset in commercial real estate for the last 20 years. So how much do they actually cost? What determines the price of a mobile home park? Is it location, lot count, cap rate? We're gonna get into it in this video. Can you buy a mobile home park for $500,000 or do you need millions? We're gonna get into it of what a mobile home park costs. By the end of this video, you will know what are the key factors that affect the cost of a mobile home park, what's a good deal on a mobile home park or the return that you're looking for, and what are the key factors of finding good deals in mobile home park investing. Understanding mobile home park pricing. There's a wide variety of mobile home parks in the country. There are $1 million, $2 million mobile homes in Malibu, in Florida, and there are $10,000 or $1,000 mobile homes in rural Texas or Oklahoma. You don't want to own the mobile homes, you want to buy the mobile home park, yet it helps you understand what are the quality of tenants that are in my property. There are going to be 5-star properties that are going to be in California, Florida, Texas, Colorado, high-end mobile home park communities. These typically don't come up for sale often, and they're owned by the biggest institutional buyers in real estate. And then there's also really dilapidated, rough mobile home parks spread all throughout the country. Metal homes, metal roofs, very, very small lots. Half of the lots could be filled with RVs. These are on the lower end of the spectrum and they're very, very hard to manage and own and operate. This will dramatically affect the pricing. So cap rates are important. The return on investment from that asset is what you're looking for because we're buying mobile home parks for cash flow. So a $10 million mobile home park in California may yield a very low cap rate because it's a community full of retirees and there's high quality housing, high quality tenants that have large incomes. And there's other mobile home parks that are 10 caps but are in the roughest areas of a city and they are very hard to manage and not dependable. The tenants do not pay, they come and go. There's a lot of issues with drugs and violence. This is going to be the spectrum that you're dealing with. I focus on right in the middle, where you have a mix of older homes and newer homes. You have good jobs in the area. It's a place that you wouldn't mind a family member living in. These are the parks that we would want to focus on because these are ones that we can add value to the investment and it's not such a heavy lift that you're not able to execute on the business plan. You can make some small changes to the property and increase your profits as an investor, but also provide great housing and affordable housing for all the residents that live there. The next factor is the size of the mobile home park. And when it comes to mobile home parks, bigger is better. If you can acquire over 100 lots in one location, that's going to be a valuable asset because the operating expenses can be somewhat fixed. You still have to pay your taxes, you still have to pay a manager to be on site, there's still a maintenance man, there's utilities. The more income you can bring in on that property, the less of a percentage that your expenses are going to be. So ideally, I'd like to focus on 50 or more lots to have that scale where you can make enough money to generate $10,000 a month to make it worth your while. If you start getting into 5 or 10 unit mobile home parks, they're just not going to be profitable and they become a job because you can't hire a full-time manager that's going to be able to receive a $40,000 or $50,000 a year salary because there's not enough income being generated from the property. Now the flip side is a 300 or 400 unit property is going to be owned by a lot of big institutional buyers. So that sweet spot is anywhere between 50 and 150 lots. That's where you're going to make the most money in mobile home park investing. And that's where they're going to have the best values that you can buy and improve that value. Now remember, look at the lots. Are they big enough to fit a modern home? Modern mobile homes are 16 by 80 or 16 by 70. That's a single wide, so it's 16 foot wide and 70 long. These parks ideally need to fit these newer homes because over time you're going to need to fill in these lots with some updated homes as some of the older homes become outdated or people walk away from them and they're not worth fixing anymore. So lot size is really important and it's going to affect the value of the community. Cap rates. How do investors look at what a cap rate for a mobile home park could be? Now, in these premium areas of California, Florida, mobile home parks are trading at 4 caps because they are so dependable. These people need this affordable housing and they're typically retired, they have good incomes. It's like clockwork. I mean, these people pay and these assets are very valuable to investors. So you can count on a low cap rate for a really nice, big quality institutional park in a high quality neighborhood or area. On the other end, you could find 10 or 12 caps or even 15 caps on really old, dilapidated parks. But don't be fooled. Many times sellers will factor in renting all the mobile homes to the tenants showing that they're bringing in good incomes, but there's so many expenses associated with running these rental mobile home parks that you're truly not getting a 15 cap. There's maintenance, there's repairs, there's supplies, there's more staffing, and there's so much turnover when you're owning those mobile homes. So when evaluating a cap rate, you're only factoring in the lot rent that comes in as the revenue. Do not factor in all the mobile homes that are rented on the site if a seller is selling mobile homes with the mobile home park. So when you factor in all the lot rent coming in just on the land, and then you take out your expenses, this is the true way to factor in a cap rate. And you have to be sure to have management put into the expenses. Many mom and pop owners, family-owned businesses manage the property themselves, and they believe that they don't need to put a management expense, but investors are going to want a management expense because investors don't like managing property. They need a property manager to manage for them. Factor that in the cap rate. Cap rates on the low end, 4% on premium parks, maybe 5%, up to 6, 7, 8 on decent quality mobile home parks, and then they could be 10 plus, but be careful on those parks because many times you're walking into a hornet's nest. Some key factors to look out for when buying a mobile home park where you're not factoring in the cap rate. Deferred maintenance. Mobile home parks were built at scale 50, 40, maybe 30 years ago at the least. So these are older infrastructures, meaning water, sewer, power lines, roads. These things become outdated. They are depreciating. So you need to come back and fix up these systems, and that could cost you millions of dollars, literally. So when you're buying a mobile home park, it's important to look at all of the deferred maintenance or the deferred capital expenditures. This is going to be a key piece to add on to your cost to make sure that you're factoring in the right cap rate when you're buying, because it's not only what you pay, it's what you pay plus what you need to do to improve the property to make sure you serve your tenants. Secondly is income. Delinquency is a major factor where low-income tenants have a hard time paying rent. And if you do not collect rent, you cannot pay your investors, or you cannot pay the expenses or your loan interest. So looking at the books, is the money hitting the account every single month? Meaning, is the seller bringing in those deposits? Or, and I hate to say this, but they like to finagle the books a little bit, or are they just making up numbers or showing what the expected rent should be on the profit and loss statement? You want to see that cash hit the bank, because when you inherit a property, some of these eviction laws throughout states in the country are very difficult to remove people from their mobile home. We want to be sure that there's good collections. That way you know what you're really getting instead of a fabricated profit and loss statement that the seller is deceiving you in order for you to pay what you think is a high cap rate. So how to unlock and increase value? Well, there's 3 key things. Number 1, improve the property so you can raise the rent. Many times owners will not raise the rent because they just don't want to rock the boat, and they have personal relationships with a lot of tenants. Now be careful, because there's rent control throughout the country, and you have to be responsible. You have to do something to improve the property in order to raise that rent, or you're really not adding any value to the actual community. And tenants have a fixed income or a limited amount of income in these properties, so it needs to be a fair rent that's comparable to every other property or mobile home park in the area. Secondly, the utilities. If you as the landlord or the seller is paying for water and sewer, that could be a nightmare. If you live in an apartment and you're not paying your water bill or sewer bill, then I don't think you care if you leave the shower on or if you use as much water as possible, because you pay the same amount each month. Well, with mobile homes, it can get out of hand. People will fill their pools, they'll wash their car, they'll leave the water running all winter long because they don't want the pipes to freeze, and that goes to you. You have to pay the bill as the property owner and landlord. The second you put a water meter on that property and bill back for the water and sewer expense, all of a sudden the use gets cut in half. People actually start conserving water, believe it or not. And that saves you money, and that puts the bill on them, and it drives more net operating income and lowers your expenses. And the third key to unlocking value in your mobile home park is filling lots. Now, this is not easy, yet you can find used mobile homes or new mobile homes and put them on the empty lots and then sell them to tenants that are looking for affordable housing. You want pride of ownership. You want people to own their own mobile home, they maintain it, and pay the lot rent to live in the community. As you add nicer homes, and I prefer buying brand new homes to increase the quality of the park and the residents, that will increase the value of the overall property because you already paid for the land. You already have many of your costs. You're already paying property tax on that portion of the land. Now you're just adding in another rental unit, and it's going to increase the overall value. So what does a mobile home park cost? Well, it can range anywhere from $10,000 per space up to $150,000 or more per space. There's a huge variety there. A good rule of thumb for me is if the lot rent is $300 a month for a mobile home park, you can typically pay about $20,000 per space, up to $30,000 per space based on that rent. So if there's $500 a month rent being charged, you could pay maybe up to $50,000 for per space, ideally $40,000 per space. So it's a quick rule of thumb. That number can range dramatically where there's a lot more expenses or the property taxes are high or it's a high quality park and you're willing to pay a little bit more, but that's just a quick, easy rule. So finally, don't just look at the cap rate or your cost per pad when you're buying a mobile home park. You want to look at the stabilized cap rate. This is in 2 years after you make the improvements, after you add the value by raising the rents and lowering the expenses. What is the cap rate at that time? That's the real return on investment that we're focused on as value-add investors. Now, if you have more questions about how to calculate the return on a mobile home park, go to my website, patriotcalc.com. or Patriot Holdings, that's my company. I've been buying mobile home parks for 20 years. And in the next video, we're gonna get into how to manage and analyze mobile home parks so that after you buy one, you know what the heck to do to make it profitable. So click on the video above and watch that next video so you can get into the nitty-gritty of managing and analyzing these properties, or leave your comments below. Tell me some good mobile home park deals or bad mobile home park deals that you've done, and I'll share mine with you.